Hi, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch my weekly stock market update video for the week of Monday, June 17th, 2019. I'd like to just do a real quick quote of the week, and this one's from Muhammad Ali. I like this one. It says, "Inside of a ring or out, ain't nothing wrong with going down. It's staying down that's wrong." Those are some wise words from Muhammad Ali. Well, I have a short video today just because we're running off on a trip to Mississippi real quick tomorrow, and I just wanted to get out a video because it's been a couple weeks since my last one. Sorry for the missed videos over the last couple weeks, but I plan to get back on the bandwagon, and I'll do another video next weekend. So in just a few days, I'll get another video out. So I want to just talk a little bit this week about two charts that really say a lot about where we are in this current stock market. One is the Value Line Geometric Composite, and the Value Line Geometric Composite is 1,650 stocks. So it's a very broad index of the overall stock market. But what's different is that the Value Line Geometric Composite Index is equally weighted, meaning all 1,650 stocks are the same amount of the portfolio across the board. That's different from the Dow Jones Industrial Average and the S&P 500 because the Dow Jones weights a stock more heavily just because it has a higher stock price. That doesn't make any sense to me at all. I think it's one of the most illogical things that I could possibly imagine is to weight a stock by its stock price. A stock price can be split 2 for 1. It can be reverse split 1 for 2. A stock price means absolutely nothing. Yet for many years and decades, the Dow Jones Industrial Average seems to just favor a stock and weight it more heavily because its stock price is higher. Then go figure. I don't know. But the S&P 500 is a little more logical in that it weights a stock in the 500 company index by how big the stock is. How valuable the company is. So the more valuable a company is, the bigger the share, a bigger piece of the pie that it makes up in the S&P 500 index, and the smaller the company, the smaller the share it receives in that index as well. So if you want a very broad view of this stock market, take a look at the Value Line Geometric Composite, which I'll show you here in a second. And then I want to show you the 10-year chart of the S&P 500, which I showed back in April. We blew right through the support line from 2009 to 2016 all the way up to 2018, and we blew through that in a glorious fashion in October 2018. Now, we blew through it and came down and made a low at Christmas and then shot all the way back up to retest that line. Rather than talk about it, I'll just simply show it to you. But you'll see that we retested that line, the 10-year trend line from underneath, and we have failed. And that is not a very good sign. That is extremely bearish, which means not a good indicator for the S&P 500 or the stock market for that matter. So let's go ahead and jump right into those charts. I'll show you those two. I'm going to keep it short and sweet this week, but again, I'll be back in just a few days, and we'll dig a little deeper into the economic data. Oh, and by the way, the Federal Reserve is having a meeting this week on Tuesday and Wednesday, and Jerome Powell, our Fed chairman, will have a press conference on Wednesday at 12:30 p.m. Mountain Time, 2:30 p.m. Eastern, and they're supposed to either raise interest rates, lower interest rates, or keep them the same. No matter what we do, I think it's going to be quite a circus. So we'll see what happens this week. Again, just remain careful and cautious and vigilant with your hard-earned retirement savings. All right, let's take a look at those charts, beginning with the Value Line Geometric Composite. Okay, here's that chart of the value line geometric composite. This is a 18-month chart. So the left side over here is December 2017. Now, what I wanted to point out to you is the fact that we had a high right here, January 26th, 2018. We dropped about 10% into this low of February 2018, and then we rallied all the way back up to the highs and made a brand new high August 29th, 2018, and then we rolled over and just absolutely plummeted. Let me see how far we dropped from August to December. Having checked the numbers, the drop from this day of August 29th into Christmas was a 25% drop in the US stock market. And you wouldn't have really known that such a thing could happen because we were all focused on the fact that the S&P 500 was down 19% and something like that, but a 25% drop in the stock market in 3 months is absolutely stunning. The most important thing that I want to bring to your attention is the fact that we have not made a new high since this one right here, August 29th. We rallied up in the value line geometric composite, made a high here February 22nd, but it was a lower high. We tried again throughout April and May. How many times? 1, 2, 3, 4, 5 times, and we just couldn't survive. And then down we went again, and then a small little bounce here. So what this chart shows, and I'll show you a chart of this compared to the S&P 500 in a moment, but what this chart shows is that the stock market has not gone anywhere and is actually lower than it was a year and a half ago when you measure each stock in this 1,650 company index equally. What makes the S&P 500 different is that the top 10 stocks make up a huge amount of the portfolio. Let's go ahead and quickly look at this value line geometric composite compared to the S&P 500. So what this chart shows is the value line geometric composite in black and the S&P 500 in blue over the last 18 months. And you can see that over this time frame, the value line geometric composite, again, which measures all the stocks equally, is getting lower. We hit a high August of 2018, and then a low, and then a lower high, and then we tried to make another higher high and failed. So we are not making higher highs in this stock market when you look at the entire universe of stocks, in this case 1,650 stocks, equally. And this blue line, the S&P 500, you can see we came down and then we bounced after Christmas, came up and made a new higher high, a new record high for this index, and then dropped 7% in the month of May, followed by a rally here over the last couple weeks. So what I want you to take away from this chart is that the broad stock market index, or one of the broadest, the value line, is going lower and lower and lower as time is going on. The S&P 500 is not showing that, partly because the S&P 500 is so heavily weighted toward the top 10 or 20 stocks. As long as those stocks are doing well, it doesn't really reflect what the health of the entire stock market is doing. You're really looking at a very narrow universe of companies up here. The best thing to do is to look at a broad index, and that is what you have down here, and that is showing tremendously important warning signs. So anyway, that's what I was going to say about this value line index compared to the S&P. Let's take a look at the 10-year chart of the S&P 500. Okay, this is an 11-year chart of the S&P 500 beginning on looks like June 14th or so, 2008. And what I want to bring to your attention is the severity of what has happened last fall, 2018. If you draw a line from this low down here, March 2009, the very bottom of the financial crisis, Then you project that line all the way up so it touches January 2016, January 16th, and January and February 8th, 2016. Then you project that line even further up to April 2nd, 2018. You can see that we came down. Each increment on this chart is 1 week. We broke that in October of 2018. We broke that line for the first time, rallied back up, touched it, failed, touched it, and then failed into Christmas. And what really gives me reason for concern is that since Christmas we had an unbelievable, it's not even the word to describe it, but unimaginable, unbelievable rally since Christmas to come all the way back up and touch that blue line, the 10-year trend line from underneath. And as soon as we hit it, we pulled back 7% and we bounced again. So the takeaway on this chart is that the 10-year trend has broken. The same thing has happened. That blue line, the trend line right here, this blue line, it was similar in the year 2000 and in 2008, and we have broken it again. That means that there is no support under this 10-year rally at this point, and I would just say that the blue line is resistance. It's going to be very difficult to get above it because it's tried numerous times and failed. And as I've said in the last several videos, the valuation of the stock market, as analyzed by John Hussman's profit margin adjusted PE ratio, we're at the highest stock market valuations in recorded history, and our trend has been broken. So I'll just wrap it up by saying be careful. That broken 10-year trend is nothing to discredit. I would highly pay attention to it, and if I can help you with your investments, please give me a call. I'd be happy to help. Thank you for watching my video this week. Before you go, please do me a favor, and if you're on Facebook, LinkedIn, or Twitter, please visit Christensen Wealth Management and like or follow that page while you are there. And then if you're watching this on YouTube, please click the little subscribe button on your screen and then the little bell next to it so you'll be notified whenever I make additional videos. I would appreciate that so I can keep in touch with you throughout the week and throughout the months as we go through the remainder of 2019. Well, just remember my two favorite quotes. One is, getting back to even is not an investment strategy, which means that when you're at very high valuations in the stock market like we are today, it doesn't hurt to be cautious and just wait patiently for the market to correct and use that opportunity to buy at much more attractive prices. So there's no reason to be invested all the time. You can be always invested in bonds, always invested in stocks, or always invested in cash. You don't have to just do the same thing day after day, year after year. And then my other favorite quote is, the best way to make money is to not lose it in the first place. So keep those two quotes at heart, and I'll see you again in about another 7 days. Thanks again. Bye-bye.